After the Fed's major rate cut in March 2020, Bitcoin's price surged over 300% within the following months. With a likely rate cut on the horizon, could we see history repeat itself? In this video, we'll explore whether the Fed's next move could send crypto prices rocketing once again. Hi everyone, welcome to Crypto Coast News, your gateway to crypto mastery. The Federal Reserve's decisions have far-reaching implications, not just for traditional markets, but for the rapidly evolving world of cryptocurrency as well. With speculation running high, we're going to explore how a potential rate cut could impact Bitcoin, Ethereum, and the broader crypto market. So, if you're wondering whether now is a good time to position yourself for a potential rally, stick around, we've got a lot to cover. Let's start by understanding what the Fed's rate cut actually is and why it matters. The Federal Reserve, often simply called the Fed, is the central bank of the United States. One of its main tools to control economic activity is the federal funds rate, which is the interest rate at which banks lend to each other overnight. When the economy shows signs of slowing down, the Fed may decide to cut this rate. The idea is that lower interest rates make borrowing cheaper for businesses and consumers, encouraging spending and investment. This, in turn, can help stimulate economic growth. But how does this tie into the world of crypto? Well, lower interest rates also mean that traditional assets like savings accounts and bonds offer lower returns. A few years ago, you were probably seeing the results of this yourself, where personal savings accounts were barely paying any interest at all. Now, this might surprise you, but investors like making money. So when interest rates are low, they start looking at other, more risky assets which offer higher returns, such as stocks and, increasingly, cryptocurrencies. This brings us to the big question. Could a Fed rate cut drive a massive influx of capital into the crypto market? To get a better idea, let's look at history. Traditional markets, like stocks and bonds, have historically reacted positively to rate cuts. When the Fed lowers rates, borrowing costs drop, corporate profits may increase, and stock prices often rise as a result. For instance, during the financial crisis of 2008, the Fed cut rates aggressively to near zero. This helped stabilise the stock market, which eventually recovered and entered a prolonged bull run. In the most recent example, during the COVID-19 pandemic, the Fed once again slashed rates to support the economy, leading to a surge in stock prices. But how does this translate to crypto? While the crypto market is relatively new compared to traditional markets, we've seen instances where the broader economic environment has influenced crypto prices. In times of economic uncertainty, Bitcoin, often referred to as digital gold, has seen increased interest as a store of value. However, the relationship isn't always straightforward. Unlike stocks, which are directly impacted by corporate earnings and economic data, crypto prices are driven by a mix of factors, including technology, regulation, and market sentiment. So let's dig deeper into how exactly a rate cut could influence crypto prices. When the Fed cuts rates, it injects liquidity into the market. More money circulating in the economy can lead to increased investment in various assets, including cryptocurrencies. Lower interest rates could also make traditional investments less attractive. For instance, with bond yields dropping, investors might seek out alternative assets that offer higher potential returns. Cryptocurrencies, known for their volatility and high-risk, high-reward nature, could become a prime target for these investors. Additionally, a rate cut can weaken the US dollar. A weaker dollar often leads to higher prices for assets denominated in other currencies, including Bitcoin. This is because as the dollar's value decreases, it takes more dollars to buy the same amount of Bitcoin, which effectively pushes up its price. Moreover, the narrative around Bitcoin as digital gold could gain traction in a low-interest environment. With traditional safe haven assets like gold offering low yields, Bitcoin could attract more attention as a hedge against inflation and economic instability. However, it's important to note that while these factors could lead to a price surge, the crypto market is highly unpredictable. Price movements can be influenced by a variety of factors, including technological developments, regulatory news, and broader market trends. To understand how a potential rate cut could affect the crypto market, we need to consider current market sentiment. Sentiment is crucial in the crypto world. When investors feel confident, they're more likely to pour money into the market, which drives up prices. Conversely, fear and uncertainty can lead to sell-offs. If the Fed announces a rate cut, It could serve as a catalyst for a shift in sentiment. Investors who have been sitting on the sidelines might see this as a sign to re-enter the market, anticipating that the influx of liquidity will boost prices. Social media and news coverage will also play a significant role. Positive coverage of the rate cuts' potential impacts on crypto could create a feedback loop, where increased attention leads to higher prices, which in turn attracts more investors. However, sentiment can change quickly, especially in the volatile crypto market. It's important to stay informed and be ready to adapt your strategy as this situation evolves. While the prospect of a rate cut sparking a crypto boom is exciting, there are also risks and uncertainties to consider. One of the biggest risks is that the market's expectations might not align with reality. For example, if the Fed cuts rates but also signals concerns about the economy, this could lead to a broader market anxiety, which might dampen the positive effects of the rate cuts on crypto prices. Additionally, the crypto market is still heavily influenced by regulatory news. A sudden announcement of new regulations could counteract any positive momentum from a rate cut. For instance, if a major economy announces stricter crypto regulations, this could lead to a sell-off, regardless of the Fed's actions. There's also the risk of market manipulation. In the highly speculative world of crypto, large players, which are often referred to as whales, can move the market by buying or selling large amounts of cryptocurrency. A rate cut might be used as an opportunity to pump and dump, which is where prices are artificially inflated before being sold off. Finally, the Fed's rate cut might not have the expected impact. If the broader economic environment remains weak, even an influx of liquidity might not be enough to sustain a long-term rally in crypto prices. To provide a balanced view, let's look at what some experts are saying. Many financial analysts believe that a Fed rate cut could provide a short-term boost to crypto prices, especially if it leads to a weaker dollar and increased liquidity. However, some experts caution that the crypto market is still maturing and that its reaction to traditional economic policies can be unpredictable. For instance, while a rate cut might lead to a short-term rally, the long-term effects will depend on a variety of factors, including how the broader economy performs and how investors perceive the risk of holding cryptocurrencies. Others argue that the narrative around Bitcoin as digital gold could strengthen in a low-interest environment, attracting more institutional investors who are looking for alternative assets to diversify their portfolios. These varying opinions highlight the complexity of predicting market movements in response to economic policies. It's important to consider multiple perspectives and not rely on any single forecast when making investment decisions. Let us know how you think the rate cut will impact crypto prices by leaving a comment below. So, what might this mean for investors? It's important to stay updated on the Fed's announcements, as changes in interest rates can influence market liquidity and asset prices, including cryptocurrencies. Historically, rate cuts have often led to increased liquidity, which some investors believe could drive up crypto prices. However, market dynamics are complex and outcomes can vary. Investors often look at major assets like Bitcoin and Ethereum during key economic events, as these can significantly impact the market. Diversification is another common strategy to spread risk, sometimes including smaller altcoins for potential growth. Tools like stop-loss orders can help manage risk during downturns, while dollar-cost averaging may reduce volatility's impact. Monitoring market sentiment is crucial, especially after significant events like Fed announcements. The information in this video is for educational purposes only and not financial advice. Always conduct your own research or consult a financial advisor before making investment decisions. Looking ahead, the Fed's monetary policy will continue to play a significant role in shaping the crypto market. As the global economy navigates through uncertain times, the central bank's decisions on interest rates and monetary stimulus will likely have far-reaching effects beyond traditional markets. If the Fed continues with a low interest rate environment, we could see sustained interest in cryptocurrencies as investors search for higher returns. This could lead to further adoption of Bitcoin as a store of value, potentially solidifying its role as digital gold. On the other hand, if inflationary pressures mount and the Fed is forced to raise rates, this could challenge the bullish case for crypto, making it essential to remain flexible and adapt to changing conditions. In conclusion, While a Fed rate could spark a rally in crypto prices, it's important to approach the market with a well thought out strategy. Stay informed, manage your risks, and be prepared to act on market developments. As always, the crypto landscape is full of opportunities, but also pitfalls for the unprepared. Thanks for watching, and if you found this video helpful, don't forget to like, subscribe, and hit the notification bell for more insights from Crypto Coast News.